Aloha, I'm Lahaina Lee, and welcome to the Maui Real Estate Advisor podcast, your source for insights on buying, selling, and investing in Maui real estate. Today, we're focusing on the condominium market, specifically short-term vacation rental condos. If you're new to the podcast or just getting familiar with the Maui market, it's important to know that the short-term rental condo sector has been struggling for nearly 2 years now. That downturn began shortly after the Lahaina fires. In the aftermath, Lahaina, West Maui, and really all of Maui needed a minute. We lost homes, businesses, and most tragically, lives. So it wasn't just a matter of picking up where we left off. Business as usual had to wait. However, small businesses, many of them heavily reliant on tourism, are the backbone of our island economy. Without a steady flow of visitors, those businesses struggled to survive. Some had to shut down, and many of the people who worked in them were forced to leave the island to find opportunities elsewhere. A big part of that downturn was due to extended warnings and pleas from government leaders asking people not to travel to Maui. While well-intentioned, those messages had a lasting effect. You can still see echoes of that sentiment all over social media today. Without the usual flow of visitors who would have normally considered traveling to Maui, many businesses continued to struggle. But perhaps no group was hit harder than the individual owners of short-term rental properties. After already enduring near zero occupancy during COVID, they were just beginning to recover when the fires hit. What followed was another steep and sudden drop in bookings, leaving many of those owners with mortgages to pay, but little or no income to cover them. And it wasn't just the mortgages. These properties come with very high homeowners association fees, and those located outside of the Lahaina burn zone, the burden was compounded by steep property taxes. The financial strain has been relentless. To make matters even more challenging, the mayor took the bold step of proposing that a specific group of just over 7,000 apartment zone condominiums, properties that currently have the legal right to operate as short-term rentals, that they have that right revoked. The intent was to create more housing options for residents by converting these units to long-term rentals. And while that goal is understandable, the practical reality is another story. Most of these condos are small, with limited parking, no storage, and monthly homeowner association fees averaging between $1,500 and $2,000 a month. The idea that a significant number of local residents could afford or even want to live in these units just isn't realistic. Add that to the lingering perception that Maui isn't quite ready or welcoming to visitors, and the impact becomes even more pronounced. We've heard this directly from many people who used to visit every year, including many of our Canadian friends who, in their case, have their own issues with the U.S. Add this to all the uncertainties surrounding the future of those apartment zone short-term rental properties, and it's no surprise that the value and marketability of condos in Maui has taken a major hit. Now, don't get the wrong idea. Condos are still selling on the island, but it's slow, very slow. We're talking 2008 Great Recession slow. Naturally, most of us brokers expected that the condos directly impacted by the proposed short-term rental ban would see the biggest decline in activity. And we assumed that properties in the hotel zone buildings, or those that were never even allowed short-term rental in the first place, would be much less affected. But with the overall sales volume dropping to levels we haven't seen since the recession, I wanted to take a closer look at the actual numbers and see what the data is telling us. Now I'm going to walk you through some charts with explanations. If you're watching this on YouTube, you'll see everything visually. But if you're listening, maybe while you're driving, I'll do my best to describe things clearly so you can follow along without seeing the charts. That said, if you're really interested in the details, I recommend you check out the YouTube version later, not while you're behind the wheel. So let's break down the three main categories of condos here on Maui. The first category includes properties that were purpose-built to look and operate like a hotel. They have front desks, resort-style amenities, beautifully maintained grounds, all owned and managed by the Homeowners Association. But the individual units are privately owned, just like by people like you and me. These properties, like Ka'anapali Shores or the Whaler in Ka'anapali, Ho'olei in Wailea, or the Royal Mauian in Kihei. The second category is similar in function but different in zoning. These properties were also designed to look and feel like hotels, with front desks, pools, and other resort amenities, all owned by the Homeowners Association and individual unit owners. The key difference? These are zoned apartment, not hotel. And here's the important part. Owners in these buildings have a legal right to rent their units for short-term vacation use. Always have. They bought with the clear understanding that short-term rentals were allowed by law. Examples of this type of complex include Polynesian Shores, the Kapalua Golf Villas in West Maui, or Lahaina Kai or Maui Kamaoli in South Maui. Then there's a third category, which we're not going to spend much time on today. These are residential complexes that were never intended for short-term vacation rentals. They were built for full-time residents, second homes, or long-term tenants with a required minimum lease of 6 months. Examples would be like the Masters in Ka'anapali or Kapalua Ironwoods, Kaimalu in Wailea, or Kaiani Village in Kihei. I'm getting to know that one pretty well. Again, most of us assumed the third group of condos, the ones never intended for short-term rentals, would largely be unaffected by all the controversy around vacation rentals. But we were wrong. In reality, all condo values on Maui have taken a hit. Now, we also expected that apartment-zoned short-term rental properties would see the biggest decline in value, and that hotel-zoned condos might actually go up in value, especially if the apartment-zoned properties lost their legal right to rent short-term. But that's not what happened either. So here's what I'm going to be showing you. I'm going to compare hotel-zoned condos to apartment-zoned condos that allow short-term rentals. Specifically, we'll be looking at active listings, selling prices, time on market, months of inventory, and total sales over the past 12 months. So here's what we've got. On this chart, you can see a side-by-side comparison of hotel zone versus apartment zone short-term rental condos. Right now, there are 247 active listings in hotel zone complexes and 250 in apartment zone properties, so that's almost exactly the same in terms of inventory. But the median selling price tells a different story. Hotel zone properties are selling at a median price of $950,000, while apartment zone condos are coming in at just $793,000. That's a difference of about $150,000. Now, we'll go into more detail on one of the next slides, but here's something important. Hotel zone properties are taking longer to sell. As a result, we're seeing about 20 months of inventory in the hotel zone category compared to 15 months of inventory for apartment zone short-term rentals. On this next slide, we take a deeper dive into the inventory. You'll notice a slight adjustment to the active listings, 230 hotel zone condos and 235 apartment zone condos. The difference from the previous slide is due to the number of properties that are currently under contract, pending. And here's where it gets striking. Only 17 hotel zone condos are under contract, and just 15 apartment zone condos. That's a total of only 32 pending sales across both categories island-wide. That is incredibly low. In a healthy, active market, we'd expect that number to be significantly higher. This tells us how hesitant buyers are right now and how little momentum there is in the short-term rental condo space. Now, looking back at the last 6 months of actual sales, 69 hotel zone condos have been sold compared to 92 apartment zone condos. So we've actually seen more sales from apartment zone condos despite the legal uncertainty hanging over them. That's not exactly what I would have predicted. Now, on the flip side, the data shows that hotel zone condos are selling at higher prices across the board. Let's walk through it from lowest to highest. The lowest price in a hotel zone category was $305,000, a leasehold unit. For apartment zone condos, the lowest was $395,000, about $90,000 higher. The median price tells a little different story. $950,000 for hotel zone condos compared to $793,000 for apartment zone condos. That's a pretty significant gap, about $157,000. But the biggest difference shows up in the average selling price. Hotel zone condos averaged $1.8 million, while apartment zone condos averaged only $997,000, just under $1 million. And of course, only on Maui would we say just under $1 million, like it's nothing. Now, part of the difference there, might be a little bit skewed by the highest selling price in each category. The top hotel zone sale came in at a whopping $12.6 million. For apartment zone condos, the highest was $5.5 million. Still big, but not in the same league. And just a quick footnote on that $12.6 million property, even though that property is hotel zoned, the HOA no longer allows short-term rentals. So zoning doesn't always tell the whole story. Now, this next chart gets into one of the insights I was really looking for. Over the last 6 months, apartment zone condos have actually outpaced hotel zone condos in total sales. We've been averaging just over 15 sales per month in the apartment zone category compared to only about 11.5 sales for hotel zone condos. So despite all the legal uncertainty around apartment zoning, the numbers suggest that these properties are still just as desirable, maybe even more so, than hotel zoned units. Now, when you pair that with the current inventory levels, it paints a clearer picture. Hotel zone condos have 20 months of inventory, while apartment zone condos have just 15 months of inventory. And if you're wondering how long it's going to take to sell those properties, that's where things get even more interesting. The median days on market for hotel zone condos is 129 days versus just 94 days for apartment zone units. And the average days on market also had a gap, 158 days on the market for hotel zone properties compared to just 136 for apartment zone. So not only are more apartment zone condos selling, they're also selling faster. So here's what's really interesting. Given the looming threat of losing the legal right to do short-term vacation rentals, you'd think buyers would lean toward the safer play, the hotel zone properties, where that right is secure. But that's not what we're seeing. Instead, it appears that the lower price point of apartment zone properties is actually more compelling to buyers than the risk of future restrictions. That tells me a few things. Some buyers are betting that the ban won't pass. Others may think that the price discount already reflects the risk and they're taking the dip. And some might just be looking at the numbers and seeing a better potential return if the regulations hold. Whatever the case, the data says people are still buying and buying faster in the apartment zone category. That tells us that the uncertainty isn't always the deterrent we expect it to be. Price is still speaking the loudest. Another data point we look at, and one that sellers and buyers for that matter really want to know, is what percentage of asking price are condos actually getting? Now, historically, according to the National Association of Realtors, that number tends to be, around 94%. In other words, buyers generally offer and sellers accept something like 6% below list price. Now, in this chart, if you look at the bars on the right, you'll see that we're still pretty close to that historic average. Hotel zone condos are selling at 93.8% of asking. Apartment zone condos are slightly lower at 93%. So across both categories, we're seeing sellers come down about 6 to 7% on price to get the deals done. It's not a fire sale, but it does appear to be a buyer's market when it comes to negotiation. But here's where I wanted to dig a little deeper. In most cases, the final sales price we just talked about isn't based on the original listing price. It's based on the last asking price after one or more price reductions. What percentage of the original listing price are sellers actually getting? Well, it turns out that number is just about 88% for both hotel zoned and apartment zoned condos. So what that means is sellers start at one price, reduce it, sometimes more than once, and eventually accept an offer that's about 12% below where they originally listed. That's very telling and honestly instructive for both sellers and buyers. For sellers, this is a reality check. You're not just dealing with higher interest rates or more inventory. You're also likely facing higher HOA fees than you had in 23. And a lot of this is coming from rising insurance premiums, not just in Hawaii, but nationally, as well as the increased cost of maintaining some of these older buildings. And buyers, who always ask, how motivated are the sellers right now? Well, just look at the numbers. 12% off the original price is about as motivated as it gets in a non-distressed market. Now, here's something else I noticed. While 92.8% of all hotel zone condos sold below their original asking price, 7.2% actually sold at the original list price. For those of you doing the math, that translates into about 4 condos. And some of those sales, well, they weren't exactly arm's length transactions. For apartment zone condos, the story is pretty similar. 95.6% closed below the original asking price. 3.3% sold at the original asking price. And believe it or not, one condo actually sold for over asking. Miracles will never cease. Just a few key insights here to wrap up the slide portion of our show. Hotel zone condos continue to enjoy a clear pricing premium over apartment zone condos. The median price for hotel zoned units was $950,000 compared to $793,000 for apartment zoned. That's a 20% premium. And that gap widens when we look at average prices. That's $1.8 million for hotel zone versus just under $1 million for apartment zone. That's an 80% difference. That's likely skewed by high-end complexes like Wailea Point or Montage at Kapalua. But here's the trade-off. If your goal was to sell sooner rather than later, apartment zone condos had the edge in the past year. They had 15 sales per month on average versus just 11 for hotel zoned. They sold faster, 30% fewer days on market. And based on current absorption rates, apartment zoned inventory is 25% lower, 15 months of supply compared to 20 for hotel zoned. Now, if you can call 15 months of inventory demand, well, that's a stretch. But relatively speaking, it's stronger. And from a pricing standpoint, both types of condos ultimately received 88% of their original asking price. Slightly more hotel zone properties hit their asking price, but let's be honest, in both cases, it's a very small percentage. So what does all this mean? For sellers, it means you really need to take a hard look at your asking price. Talk honestly with your broker about what's realistic in today's market. And if you bought more than a couple of years ago, even at a reduced price, you're still likely to walk away with a solid profit. For buyers, be realistic too. Look at the data. know what you're getting into, and take comfort in the fact you've got a lot to choose from. Thanks for tuning in. If you have comments or questions, drop them below or shoot me an email at lee@alohapots.com. I read and answer every one. If you found this episode helpful, give it a like, maybe share it with someone you know who's thinking about a Maui property. And if you haven't already hit the subscribe button so you don't miss a thing. That's all for now. From the greatest island on earth, this is Lahaina Lee saying aloha.